Okay, I think we can get started in the interest of time to give enough room for us to discuss. My name is Winifred Cotin, and I'm co-founder of Superfit Labs. And this session is to discuss and present our credit risk assessment, data analytics and artificial intelligence pre-training session to talk more about the course, to answer questions, and to discuss some of the benefits and why this is a good opportunity at this time for us to take advantage of the growth in exponential growth in data to improve and increase revenue made from lending. Okay, in the interest of sustaining the bandwidth, I just turn off my video, can bring it on later. So thank you all for joining us. We can start by looking at who we are. Feel free to type in any questions you have, and we would also unmute our mics and have a conversation afterwards. But do type in any questions you have ahead of time. So we'll go through briefly who we are. Okay. So this training program is being facilitated by Superfit Labs, and we are a data analytics and artificial intelligence company. What we do is that we help unlock value from data for business growth. And we do this across 5 industry sectors: financial services, clean energy, retail, commerce, technology companies, and agriculture-related or focused businesses. We are available in Ghana, Kenya, and Germany, but serve our clients across the whole of Africa. Wherever data is being generated and data can be unlocked for value creation, we want to be able to serve our customers wherever they are. So our main offerings are actually in largely 3 classes. So we offer credit risk scoring model development from data. We also provide an enterprise intelligence platform for business intelligence, customer intelligence, monitoring agents performance, sales agents performance, and providing analytics and insights on product utilization, uptake, customer retention, churn risk, and such related activities. And we also do capacity building and training programs to equip the internal data needs of various enterprises we serve, and those who can take advantage of the growth in their internal data and the growth in data external to them, but it's available or useful to their business, on how best to capture value from data. We've received some recognitions. Most recent ones are being adjudged the best data analytics and credit risk scoring company at the African Tech Summit. That was just last year. And we've also been recognized as one of the companies that is aspiring in Africa by the London Stock Exchange Group. Some of the clients we've served are listed here. Some of them are known depending on the market across West Africa and East Africa mostly, and some too out of Africa. Our business entails lending, credit risk for lending, and for credit risk for lending, we deal with customer-related data, historical lending data where present, transactional and customer data, MNO, that's telco-related data, and any other third-party transactional data which is available. We are able to build credit risk scoring models for various purposes, for new lending products, for optimizing existing lending models, collections, improving collections and repayment, and reducing the non-performing loan portfolio, as well as provide capacity building and training related to credit risk assessment for both technical and non-technical stakeholders in organizations. And we also have our enterprise platform, just a casual look at the capabilities. So we have capabilities around data analytics and machine learning automated on the platform. And we also have capabilities around analytics, insights, and reporting on the platform. And I think I've mentioned this, our training programs are for business executives, for those who are in non-technical roles, but appreciation of data analytics and AI would foster greater adoption of data and artificial intelligence within the business, and then also hands-on sections for technical team members from technology to data, which is usually you should have a prerequisite in programming to be able to take these courses. I think I mentioned this, but this is a picture from the event. Let's dive deep into the training program. What is it about? Now, the training program is based on these premises. One, the business of lending is a very profitable business. We all admit that if the associated risk can be managed. So a lot of the highly profitable businesses, that's main revenue generation or driver of revenue is lending. It's a very old business. Lending has been with us for time immemorial, and we can tell of the various revenue and profit is brought to various businesses, be it licensed lenders like financial institutions, and also non-licensed lenders, which is a very common trend now. As at now, a lot of businesses, especially in recent times, are becoming lenders because of the capabilities and advances in technology, and also because they hold so much valuable data and they interact with customers on a daily basis. They're able to harness that data, understand behavior, and able to predict risk at their ecosystem levels. And we think it's a very valuable business if you're able to take advantage of the growth in data, computing power, and also the advances in artificial intelligence to scale lending and to make more money from lending. The number two premise is not everyone deserves credit. Unfortunately, lending is a very valuable business, but there's also a lot of risk associated. And the risk is usually around giving credit to the wrong people who do not pay back on time, who do not pay back the full amount, or never pay back, and erodes a lot of value. Returns, unfortunately, is sometimes not able to be grown because credit is not offered, or enough credit is not offered to the right customer. So you can have a lot of funds for lending. Unfortunately, you may not be able to rightly identify the number of good borrowers out there for you to offer credit to, because we don't have the right tools, we don't know the right processes to use. So you constrain yourself and you constrain your revenue generation to only a small category of people. With artificial intelligence, all of this is now possible, and that's what this course seeks to provide understanding and knowledge on. A lot of revenue, like I mentioned, is also eroded because credit is offered to bad borrowers sometimes. And the last is, how can a business lend smartly, increase profits, and reduce losses? How would we be able to overcome those challenges and increase revenues from lending, improve lending portfolio performance, and reduce the operational cost that is associated with lending? The answer is through effective use of data analytics and artificial intelligence, especially now because the growth in data has so much expanded, especially after COVID. A lot of digitization has gone on, a lot of acceptance of digital services has gone on and is ongoing. And so the growth of data is exponential globally, irrespective of where you are, from transactions being done through channels like mobile money to services that are now being rendered through e-commerce channels. which were not possible before, or the adoption was low. Vast amount of data is generated on per second on an ongoing basis, and this presents a whole lot of new possibilities and opportunities for those in the business of lending or have interest in lending or offer services they can offer sales on credit for. And that is the opportunity we see. And we want to equip businesses and business executives to be able to make the right decisions around looking at exploiting data analytics and artificial intelligence for credit risk assessments. And we've demonstrated a lot with some of our past clients that profits in lending can actually improve over 60% when we apply the right data analytics and AI models and increase operational efficiencies as well. The objective of this course, like I'm saying, is to provide the knowledge, understanding, and build the capacity for decision making internally within organizations, within businesses, on how they can effectively use AI to grow profitable lending and reduce the losses and manage the risk. The course would be covering what and why. What is artificial intelligence? Why is it important? How do we take advantage of it? What are the global trends? And what are the new things happening? And how do we take advantage of that, especially looking at the local context or the domestic context of businesses in Africa, especially. Number two, we'll be discussing how do we do this? Now that we've gained the knowledge, how do we do this? What are the possible business applications? How do we take advantage in which aspects of the business can we apply these kind of technologies and take advantage of data? And then we will discuss getting started, framework for thinking through getting started with AI-powered credit risk scoring. And then the last and one of the most important is what are the success strategies? We don't want to be bent whilst trying out this. How can we be sure that we are going in there, we are coming out winning in terms of using AI to power credit risk assessment? So we'll go through getting started, success strategies for getting started. We'll look at challenges and we'll look at ways we can mitigate these challenges. The impact of AI-powered credit risk is enormous. So better risk scoring, what does it mean? It means a reduction in default rates. Default rates keeps plummeting. In fact, I think there was a particular time that there was a business we heard about that had over 50% of loans given us were never paid back. The portfolio performance, 50% of the loans were very, very bad. That's a lot of valuable capital going down the drain. We'll look at how AI can reduce the losses and increase profit instead of increasing the losses from lending. We'll look at how we can use AI for new product innovations to increase the market segments we serve, to take advantage of the growth, take advantage of the adoption of digital technologies, and then also provide a more consistent and fairer means of assessment. Now, not everyone has a very rich historical financial statement. However, they are very good borrowers if a lot of the data points they have could be used in credit risk assessment. So we're taking a look at how which of these additional data points or available alternative data points are good for credit risk assessment under which lending scenarios. And we also know that once you can automate, it means you have faster and more efficient decision-making processes. So the time to deliver or avail credit would be shorter if we're able to employ these technologies. And then also looking at how do we change the business models that are currently being used for lending by taking advantage of artificial intelligence. What are the effects of AI when we look at credit risk? So like I mentioned, it's now made a lot of things possible for even non-traditional lenders. Today, we see technology companies with giant ecosystems offering credits taking advantage of that and also reducing the market share for the dominant lending businesses like financial institutions. And that's a very good opportunity depending on who can take advantage of it. So technology companies have a lot of data, telecom companies have a lot of data, social media companies have a lot of data. And a lot of retail ecosystems like Amazon, like Ali, are all taking advantage of this enormous power of AI to enter into financial services provision, especially into lending, further increasing the revenues they make from business. As part of the program, we will be taking a look at application of AI in credit risk, the processes involved. What are the processes? On a high level, we learn from data using machine learning capabilities. But I will just say that what is AI? Let me define AI first. So artificial intelligence is intelligence being demonstrated by a machine. And a machine can be anything, can be a physical robot, can be a software, can demonstrate intelligence when you offer enough learning opportunities through the application of a concept called machine learning. So data is offered to models who learn from the data. And based on the data that is offered, we also talk about what kind of data, how must the data look like, where do you get data, and then what are some of the qualities of data you should be looking out for to be sure you have the good data to feed into the models for the machine learning process to carry on. Afterwards, we'll look at what are the next steps. So after learning, how do we score? What's the process of scoring? What does it mean when you're scoring risk? And then how do we predict behavior, good, bad behavior as part of the process from data? And the next is also capacity. Now, capacity is a very, very key consideration when you are doing lending, because someone may be a good borrower, but they may not have the capacity for the loan amount that is to be offered. So how do you also offer loan limits which are at par with the capacity of a prospective borrower based on the available data? And that can also be done and automated using artificial intelligence. And one key thing is giving out a loan is one thing, but collecting or repayment is a different story. So how do we ensure that not only are we doing credit risk assessments more efficiently and effectively, but how do we ensure that repayment behaviors are equally modeled so that we ensure we are getting back fully the principal and the interest expected on every amount given out. So we go through these processes as part of our training program so that we can all take advantage of the growth in data, the growth in computing power, and take advantage of AI to increase profits being made in lending or to launch new lending products and services. So what are some of the application areas I mentioned? So as part of the program, we'll be looking at application areas around prospect scoring. So it's not just when someone comes through that you decide, okay, let me start lending. A lot of, in other jurisdictions where they apply this a lot, a prospect is actually scored and then a loan limit is set for the prospect, and that is communicated proactively so that the prospect knows that, okay, if I opt into some program, I have this loan available to me whenever I want to take it. And that is possible with effective use of AI. So we'll look at using AI for prospect scoring, defining the target market and the related data you need to take, applicant scoring, who applies, who gets to apply, what do they look like, what is the data saying, do we accept the application, do we reject it, and then what is the behavior of the applicant? Are they good borrowers? Are they active? Do they look like repeat borrowers? Can we offer them some terms because we expect that they will stay with the business for a protracted period and will make more money from that? And then what is the repayment behavior? Can we collect back the loans? And then are they likely to stay in, or they'll be churning from the business. So these are some of the areas that the program seeks to cover and share more light to increase the capacity and confidence in taking advantage of AI to power lending. We also take a look at the requirements, and we always start with the target customer. Defining who your ideal customer is what would lead to identifying the data points that you should be looking at. What's the data you have? Traditional data, alternative data, financial data, data on behavior, data related to some additional parameters like the market. It's all possible when we go through the process of defining the ideal target and then go on to make sure we have the required data. And we also will discuss, even when we don't have all the data, several approaches are possible for you to take advantage of AI, even when you have limited data or you don't have access to data. So there are several scenarios we will discuss depending on the data you have, whether you have only a bit of data around customer data, whether you have a bit of data around behavior data, whether you have historical lending data, or whether some other third parties have data you can access, and how do you effectively use a third party data. So for instance, you may not have all the data, but you may have a telco partner who has data that you can take advantage of. How do you structure those relationships? So we will also be looking at do a lot of case studies to see how others have done this and what was the working strategies for them so that we can take advantage of that. The next is looking at the tools and technologies of doing AI-powered or appraising risk using artificial intelligence. We look at the expertise required so that internal teams can be constituted, and then we'll look at the processes for success. And then the last but not the least is looking at the channels for lending. Depending on the target customer, is it something you need to have agents on the field who offer actual cash and then take back, or is it a product that can be availed through USSD channels and repayments also done through those channels? So those are part of what we'll be looking at for requirements going through AI-powered credit risk. Then we'll be doing a deep dive on all of these subtopics to provide the needed knowledge and confidence to get started. And then we'll also be looking at the business applications. So what are the use cases? How do you design products? And then what are some of the examples of valuable data points that you should make sure you have indicators for doing appraisals more effectively? Some of the examples are direct lending, asset finance, e-commerce lending, fintech lending, agriculture lending. The use cases are endless. There are even services now that you can consume and pay later. Telcos have that product for airtime, some of the airtime lending. And all of these things are possible because they hold a vast amount of data on transactions historically, able to do this effectively. In the last section, model 3, we'll be talking about the success strategies, like I mentioned, target markets, considerations, challenges, and then also pitfalls to avoid. So, and we'll look at a deep dive on data availability, framework for analyzing the data you have to be able to tell whether this is sufficient enough. And like I mentioned, when it's not sufficient enough, how do you go about it? What are some of the approaches of success? So that in case where there's limited data, we can still take advantage. There's definitely a lot of risk. How do we mitigate these risks? And then there's also considerations around the regulatory framework. Some types of lending is a regulated activity. So depending on what you want to do, you would want to consider the regulatory framework within the environment you operate in. So we'll look at frameworks for considerations. And then sometimes there's internal challenges on the readiness to adapt artificial intelligence. And that's also part of the reason why we are doing this, because artificial intelligence is so powerful. A lot of businesses are winning globally. Facebook is an example, Amazon, so many great examples, several examples. Recently, I saw a fashion business that is using a lot of advanced artificial intelligence capabilities to offer clothing globally, and they are one of the most profitable clothing businesses. We wouldn't even know we buy from them, but buy from them, and they use AI. And how are they winning? If they are winning, it means they've been able to adapt artificial intelligence. How do we get internal teams to accept artificial intelligence? So we go through that as well, and some of the approaches and strategies that way. And then privacy is a big concern now. Privacy, data security are all big concerns. How do we go about offering this kind of services using AI to power lending and still be sure that we are protecting consumers' privacy? So we go through some of those strategies and best practices and best approaches as part of the program. So in conclusion, we will say we don't want you to miss out on our sessions. We offer this training programs in two formats. Option one is the live instructor-led sessions. The next one comes off in August 23rd. I think I was a mistake here. There was August 28th and 29th. We will share the details shortly for the next in-person live session, and these are all virtual so that be able to cater for the needs of everyone wherever they are. We provide case studies, examples as a case upon completion, and then we also offer a discount, a very generous discount for teams that are more than 5. So if an organization wants to train a lot of their personnel, we're able to do that and offer a very attractive discount package as well. And then we also have the self-paced learning option, and that's ongoing. So we have a learning platform where you can pay, log in, and then start learning at your own pace. And you still get all the videos, tutorials, you get the case studies, you get examples, and you get your certificates upon completion. To register, this is the registration link to indicate your interest, and then you can also speak with us through, we have an email address, and then on the forms available on the website, you're able to access us and discuss how you'd want to participate in this really, really timely and important session. Some of the past participants have come from these companies. Depending on where you are, the logo may be familiar with you. Some of them are traditional lending companies, some are in the agricultural lending space, and some of them are also in the technology lending space. Thank you very much. We'll pause here. We'll have your questions. Thanks. Do we have questions?
I think we could also take comments if there are any, probably other areas of artificial intelligence-based risk scoring that the participants would expect to be trained on in case it wasn't covered.
That's a very good point. Thanks, Emmanuel. Hello, Fidelis. Is everything okay? Do you have some comments for us, some questions for us? Hello. Just in case you are speaking, we are not able to hear you, please. Okay. It's okay to type too, just in case you are speaking and we are not able to hear you. David Amable, do you have questions for us? Is there something we should be covering or you'd want us to cover in the sessions? Okay.
I think Simon's hand is up, Winifred.
Okay.
So you could take
Hello, Simon.
Simon's question or comment.
Thanks for that. Simon.
Yes.
Thank
you, Winfred, and good day to everyone. I'm Simon from Kenya, and I want to thank Mr. David Kahindi for inviting me to this training. I also would like to appreciate Winfred and Emmanuel and team for putting together this insightful piece of training. And to me, it's well distributed in terms of content and objectives. And really, what I'm seeing at the end of the day is the aspect of good customer experience in terms of turnaround time. Because if you look at traditional lending vis-a-vis the fintech lending, whereby we are making use of AI and ML to score our customers based on their capability and also in terms of eligibility, then at the end of the day, if companies and organizations can embrace technology through artificial intelligence and machine learning, then the turnaround time for lending becomes shorter, and then customer experience becomes a wow experience at the end of the day. So I'm eager to see the next sessions and to learn and to enrich my credit risk skills and knowledge. I've been in credit risk for the last 13 years now through banking and finance. I've done microfinance banking. I've worked in solar industry, and my last job was in agriculture lending through fintech. So really, this is the right forum to be. Sorry, I'm home.
No, it's totally fine.
Yeah, and I'm also running my own company, fintech lending company. I'm lending to farmers in Kenya. It's a small venture that is coming up very well. So this is good and timely for me, and I look forward to better sessions ahead. Thank you very much.
Thank you so much, Simon. Thank you so much. And I'm so excited about your depth and wealth of experiences across industries. And we are so happy, and we hope we will be having more sessions with you to take advantage of AI to power the various use cases, possibilities for you as an experienced lender. Thanks.
Yes. Thank you very much.
Yes, I think I've seen a comment from David about we showing, demonstrating the self-paced learning. Yes, I think we will get around to that shortly. Manuel, let's know when that is okay to be shared. Okay, all right then. So Emmanuel says to organize. So I think one of the things we have the contact details. So we'll have a session on the self-paced learning as well. Okay. All right, then. That's fine. Any additional comments? Okay. Please go on. You think someone has raised their hand? Or no? Okay.
Yeah, Winfred, I just would like to ask whether it is possible to see what are some of the scoring areas that would matter when looking at a customer. What parameters would be key when setting up a credit scoring engine or when doing the overall scoring of a customer? For example, assuming I'm in Kenya and I'm lending to that farmer and I want to set up various queries for the artificial intelligence to be able to look at what are the key areas. Like, for example, do you want to look at if I'm working with a telecom, what aspects of the customer are key in looking at their capability and eligibility and in setting up the credit scoring engine? Thank you.
Okay. Thank you so much. Let me just bring up my screen again, and then we can provide some responses ahead of the training session for that. Bringing up my screen again. Okay, so I think the questions you asked relates around this particular slide. So as part of the program, we'll be doing a deep dive into this, but the areas to consider relating to lending to farmers, as part of our experiences, one of the things we noticed was a strong point, were some of the strong points for consideration for the agricultural lending was data around the farmer profile, data around the yield, farm products, types of products they are farming, data around satellite. We found satellite imaging as even sometimes predictive of ability to pay back for farmers. And then also, if you have connections with telco, are there some data points from the telco side, like M-Pesa statements, if the farmer was selling and receiving payments from that angle, are all some of the considerations. And we have a lot of data points we've been able to gather around appraising in terms of agriculture. So these are some of the areas we will be doing a deep dive into. But the agriculture use case is very, very valuable, and application areas include input finance, depending on where you want to provide financing inputs, finance, or labor, to help with labor or to help with harvesting, depending on the value chain. So we've seen application as various areas within the agriculture space, and we'll be doing a deep dive and digging deeper into that when we go through the course. To help score both performance and then also applicant and then repayment as well when we are looking at the agriculture value chain and the uniqueness of lending in agric compared to the traditional lending space. Any additional comments from any of our team members?
Thank you, Winfred.
All right. Thank you so much. Okay. All right then. Let me stop sharing my screen. So the next live training programs comes off on August 28th to 29th for the instructor-led sessions, and then there's also the self-paced learning sessions. So we'll organize a demonstration of the self-paced learning session as well, and then we'll also record those video sessions on how to use the self-paced platform and share as well for those who are interested. Okay.
Winnie, just a little confirmation. The dates, are they supposed to be July or August?
Oh, sorry. It's supposed to be July. Thanks for that.
Okay.
July. Yes, thank you. That's an
So that's like 2 weeks away from now.
yes.
Okay.
Okay. Welcome, Philip. I think we have a few more people joining us. The session is almost over. Daniel, Philip. But we recorded the session and then we would share. We would share with everyone. We'll share with everyone who has registered. Okay. I think if there are no further questions, we would want to say a big thank you all and look forward to you participating in the next either instructor-led sessions or the self-paced session. And then we are also available for consulting on the credit risk scoring, as well as on engagement for credit risk scoring model development as well. So we have a lot of vast experience and we have a lot of clients using our solutions. So in case any of them is of interest, kindly visit us on our website. We'll send you the contact details through an email shortly after the session, and then we can continue with supporting the adoption of AI for business growth, especially for profitable lending business. Thank you so much. Have a nice day.
Thank you, Winfred.
Bye.